Finance Minister Tengku Datuk Seri Zafrul Abdul Aziz has announced a transformation program for public listed companies or PLCs aimed at delivering a high-performance corporate Malaysia. Zafrul was speaking at Invest Malaysia 2021 today. He said the program will be spearheaded by Bursa Malaysia and focus on enhancing 5 pillars in the nation's PLCs, namely for these firms to be performance-driven, grow as sustainable, socially responsible and ethical organizations, to feature strengthened corporate governance, to be digitally enabled, and to support the nation-building drive to advance Malaysia's economy and community. A digital guideline book will be issued for each pillar, providing the best practices and guidance with benchmarks and case studies for PLCs to spearhead their transformation journey and enhance their attractiveness to global investors. The transformation program is set to run from 2021 to 2025. Zafrul believes the nation is on the cusp of recovery, and with these efforts from Perkukuh to the program for PLCs, the fundamentals of Malaysia's economy will become stronger, positioning it on the path of prosperity, inclusivity and sustainability. Banks have worked alongside the Credit Counselling and Debt Management Agency or AKPK to offer a new scheme to individual borrowers who fall within the country's bottom 50% income bracket group with monthly gross household income of 5,880 ringgit and below. The Association of Banks in Malaysia, Association of Islamic Banking and Financial Institutions Malaysia, Association of Development Finance Institutions of Malaysia and AKPK issued a joint statement today. Called Financial Management and Resilience Program or URUS, the scheme will see banks setting aside an estimated 1 billion ringgit to fund the cost of the reduction in interest or profit costs, including interest or profit waiver for these vulnerable customers. It is open to individual customers on application who are under an existing repayment assistance program, for example, Targeted Repayment Assistance, Pemerkasa Plus, Pemulih and Bank's Own Rescheduling and Restructuring as at September 30th this year. Aside from meeting the gross household income threshold, they must also have experienced either loss of employment or reduction of income of at least 50% and are not in arrears exceeding 90 days as at the date of the application. The statement noted that under URUS, AKPK will provide the customer with a personalised financial plan that takes into account the customer's financial circumstances and ability to afford repayment of all their financing obligations. The financial plan will encompass the following options: an interest or profit waiver for a period of 3 months, or a 3-month interest or profit waiver together with reduced instalments for a period of up to 24 months in total. During this period, borrowers with unsecured personal loans or financing and credit cards may also benefit from reduced interest or profit rates. Eligible individuals can apply for URUS through one of their banks, starting from November 15th, 2021 until January 31st, 2022. Country Heights Holdings, which was founded by Executive Chairman Tan Sri Lim Kim Yew, was among Bursa Malaysia's top gainers today, with its share price rising to the highest since June 2019. The stock rose to an intraday high of RM1.51, up by 9.42%, before settling at RM1.50 at the close, still higher by 8.7%. That gives it a market value of some RM413.56 million. In response to the EdgeMarkets.com's query today, Country Heights said the recent spike was not because of its executive chairman and controlling shareholder Lee's accumulation of shares in the developer, which raised his direct stake to 28.55% and indirect interest to 37.12%. According to Managing Director Datuk Jared Lim, the announcements in relation to Lee's share acquisitions were for past transactions. Additionally, he pointed out that the company had recently made it very clear that there was to be more separation between itself and the major shareholder. Last Wednesday, Country Heights entered into 5 heads of agreement to acquire assets from Lee's private investment holdings. Lim said the acquisition of these assets are at covert prices that will provide long-term value to the company. He added that this is also part of a larger transformation exercise which will be announced in due course. Sadana As Salam Capital or SASC, a unit of Sadana Innovator, has inked a Memorandum of Understanding with FCA Capital in its bid for a digital Islamic bank license from Bank Negara Malaysia. In a statement today, Sadana said FCA acted as the financial advisor for a consortium that submitted a bid for approval of a digital Islamic bank license from the central bank. It said the decision for the digital Islamic bank license is expected to be announced by the first quarter of 2022. Sadana said, subject to approval from the relevant authorities, the consortium intends to undertake digital banking operations in the region with emphasis on the Waqf concept. It said SASC has served over 70 financial institutions with more than 60 billion ringgit loans processed to date, projecting growth in the demand for digital solutions in Islamic financial services. The firm said this growing demand is expected to continue, considering the major shift in digital behavior towards banking habits amid the global COVID-19 pandemic. SASC CEO Khairul-Nisa Ismail believes the challenging economic conditions provide opportunities for Sharia-compliant services to thrive as more businesses seek transparent and ethical funding to safeguard their investments. This, she said, provides SASC with the strategic avenue to continuously strengthen its lead position as one of the Islamic fintech providers in the region. At the close, Sadana shared 2.34% to 62.5 sen for a market capitalization of 216.99 million ringgit. Tenaga Nasional or TNB said Malaysia is in a good position in terms of coal inventory, which made up 59% of the country's power generation resource in the first half of this year. TNB told The Edge in an email when contacted about concerns over the tightening supply of coal globally that proactive measures such as securing additional shipments have been made in anticipation of a very tight supply situation in the fourth quarter of this year. The coal supply of local independent power producers is 100% imported by TNB's unit, TNB Fuel Services. It said the coal stocks for the respective power plants are sustainable, with 25 to 30 days of inventory at all times. As of September 30th, it said the total coal stock level stood at 3.333 million tonnes, 99.1% of the required coal stock level. In addition, 7 vessels are currently anchored at stations with about 490,000 tonnes of coal waiting to be discharged. Meanwhile, some 77% of the coal Malaysia needs for next year has been contracted, with the remaining 23% to be contracted in the second half of 2022, depending on demand.